Hello students. So this is the seventh problem that we have to solve today. From the following balance sheet of Vijay Limited as on 31/12/9 and 31/12/10, you are supposed to prepare the fund flow statement. Equity share capital 5 lakh of last year, current year 6 lakh. There is an increase of 1 lakh. Is treated as issue of share capital, will come in FFS. General reserve last year 80,000, current year 1,20,000. There is an increase of GR, so it will be treated as transfer to GR, will come in adjusted PL account. Then last year profit 60,000, current year profit 1 lakh. Bank loan long term, it will come in FFS. Last year 1,60,000, current year 1 lakh, which indicates that 60,000 loan is repaid. Creditors will be treated as current liability. Provision for tax, current liability. If there is adjustment, you may have to prepare provision for tax account. No adjustment, then you can treat as current liabilities. Outstanding expenses, current liabilities. Plant and machinery, you need to prepare an account because there is an adjustment. Land and building, you need to prepare an account because there is adjustment. Stock, debtor, cash is treated as current assets. Investment, you need to prepare an account because there is a adjustment. Interest paid on bank loan 10,000. Students, as discussed earlier, all adjustments or additional informations may have to come at two places. So interest on bank loan will come in adjusted PL account and FFS. Income tax paid for the year 2010 44,000 will come in provision for tax account and FFS. As explained earlier, whenever adjustments are given, you need to prepare an account. So we have provision for tax adjustment, so you need to prepare the account. So 44,000 will come in provision for tax account and FFS. Assets of another company were purchased for a consideration of rupees 1 lakh. So 1 lakh is called purchase consideration, paid in shares. Assets consisted of land and building 40,000 and stock 60,000. That means building is purchased, stock is purchased, but payment is not done in the form of cash. Rather, payment is done in the form of issue of shares. So shares are issued, assets are purchased. Two assets are purchased. Share is a non-current, building is a non-current, ignore. Share is a non-current, stock is a current, so stock 60,000 will come in FFS. Machinery 50,000, accumulated depreciation 20,000, sold for 10,000. So original cost 50,000 minus depreciation 20,000. So 50,000 minus depreciation 20,000, you get WDV 30,000. 30,000 machine is sold for 10,000. Then you get a loss of 20,000. But that loss is not taken to PL account. That loss is being taken to GR. As explained, the loss being written off against GR. So the loss is 20,000. That 20,000 loss is taken to GR and it's not taken to PL. Closing stock of 2010 was overvalued by 5,000. So overvalue should be deducted. So 5,000 should be deducted in statement of changes in working capital. Investments are trade investments 600 by way of dividend received, including 200 from pre-acquisition profit, which has been credited to investment account. So students, dividend received is 600. So 600 is a total dividend received. Out of 600, 200 is taken to investment account. Remaining 400 is taken to adjusted PL account. So total dividend received 600. 200 has gone to investment account. 400 has gone to adjusted PL account. So students, closing stock 2 lakh minus 5,000. So you need to take closing stock of 2010, they say it's overvalued by 5,000. So 2 lakh minus 5,000, you get 1 lakh 95,000. So there is a decrease in closing stock. Last year 2 lakh 60, current year 1 lakh 95. So decrease of 65,000 will result in decrease in working capital. There is an increase in debtors of 70,000, results in increase in working capital. There is an increase in cash, results in increase in working capital 10,000. So total current asset of 2009 4 lakh 40 and 2010 is 4 lakh 55,000. There is an increase in creditor of 40,000, which results in decrease in working capital. There is an increase in outstanding expenses of 10,000 will result in decrease in working capital. So total current liability 1 lakh 60 and 2 lakh 45. So current asset minus current liability, you get working capital 2 lakh 80,000 and 2 lakh 45,000. Compared to last year, current year working capital is decreased to the extent of 35,000. The plant and machinery account, students, take balance brought down, opening balance 3 lakh, then sale 10,000, you get a loss 20,000. 20,000 loss is not taken to PL account, it is taken to GR account, remember. Then depreciation on the sale of machinery 20,000, then balance carry down 2 lakh 50,000. So both the side it tallies. So the question of purchase of machine, sale of machine does not arise. Next, land and building, students, to balance brought down, opening land and building 3 lakh, to purchases 40,000. We have purchased land and building through issue of share 40,000. So 40,000 is treated as purchase. Then closing balance 4 lakh. So 4 lakh minus 3 lakh minus 40,000, you get 1 lakh 60,000 as a purchase of land and building. Next, investment account, students, it's an asset. So to balance brought down 60,000. Then 200 rupee dividend has come to investment account. Total dividend received is 600. 200 has come to investment account. 400 has gone to adjusted PL account. So 200 dividend, then balance carried on, closing balance 80,000. So differencing figure, you get 20,200 will be treated as purchase. Next, we have provision for tax account. It's a liability. So it's called by balance brought down, bring down the opening balance of provision for tax. Then we have income tax paid given in the adjustment. So whenever you pay income tax, it's an expense, debit all expenses and losses. Then closing provision for tax 60,000. So you get balancing figure 64,000. This is called the new provisions made during the current year. So 44,000 is a tax paid immediately. 64,000 is a tax provided for future. General reserve is a liability, students. So by balance brought down, opening balance 80,000. Then 20,000 loss on sale of plant and machinery is being transferred to GR as explained in the adjustment. 20,000 is being transferred to GR. So closing balance 1,20,000. So balancing figure you get 60,000. So 60,000 will be treated as GR transfer, will come in adjusted PL account. So that 60,000 you take in adjusted PL account. Then provision for tax 64,000. Depreciation on plant and machinery 20,000. Interest on bank loan 10,000. Current year profit. Credit side last year net profit. Then over valuation of closing stock 5,000. Then dividend 400. Total dividend received is 600. 200 has gone to investment account. 400 has come to adjusted PL account. So you get an answer of FFO 1,88,600. Then issue of shares only to the amount of stock. Share is a non-current, stock is a current, hence it will come 60,000. As explained in the previous slides, sources are treated as receipts, application is treated as payments. So we received through sale of plant and machine, we received 35,000 through decrease in working capital, we received 600 rupee dividend, we did not receive any loans raised, we got funds from operation 1,88,600, and no payments were made towards redemption of shares. We made a payment of 1,60,000 for purchase of land and building. We paid a payment of 20,200 towards purchase of investment. No increase in working capital, no dividends are paid. We paid long-term loan 60,000. We paid 44,000 income tax, and interest on bank loan was paid 10,000. So you get total fund flow statement 2,94,200. Okay students, kindly work out. Any doubts, revert back. Thank you.